Welcome, everyone, to another deep dive. Today, we're plunging into the fascinating and, well, sometimes turbulent world of cryptocurrency. It's June 19th, 2025, and you've sent us an incredible stack of source material. I mean, everything from detailed market analyses, economic stuff, groundbreaking regulations, even some pretty intense cyber geopolitical intrigue.
Yeah, it's pretty compelling how, interconnected all these threads really are. Our mission today, basically, is to pull out the most important nuggets of knowledge from all these different sources. We want to help you understand not just what happened, but why it actually matters, and crucially, what you should be keeping an eye on next.
Exactly. Think of this as your shortcut, your essential guide to being truly plugged in on what's shaping crypto right now.
Okay, let's unpack this. The macro landscape. Interest rates, politics, and market reactions. Right, so we absolutely have to start with the big news from last night, June 18th. The FOMC meeting, that's the Federal Open Market Committee, the part of the U.S. Central Bank that, handles interest rates. And the chair, Jerome Powell, decided to keep interest rates exactly where they are. And, well, we saw Bitcoin and other cryptos dip a little bit in price as a result.
And this immediately raises the question, right? Why this decision now? And why such strong reactions? I mean, our sources are highlighting that President Trump is definitely not happy about it, apparently even called Chair Powell a stupid person, according to some reports. Yeah, and here's where it gets really interesting, based on our sources. Trump's argument is basically, look, Europe cut its rates, and he's saying their economy is pumping up because of it. So he wants Powell to do the same, especially since Powell himself is saying the U.S. economy is, quote, doing much better than anticipated. That's quite a direct challenge.
It really is. And Powell has consistently said, the unemployment rate is really low. Labor market conditions are probably the best it has ever been since the last few years. His words, which naturally leads some sources to talk about potential political reasons why rates weren't cut just yet.
So, okay, what's the takeaway for you listening? It means understanding the Fed's position isn't just about today's snapshot. Our sources suggest that if inflation stays low, especially when you factor in tariff data like some sources mention, the pressure to cut rates might build. That creates a different kind of market dynamic. So for your strategy, it means watching the Bureau of Labor Statistics data, sure, but also the political talk. Is the pressure on Powell growing? How might crypto react?
And zooming out a bit, President Trump's perspective, as reflected in the sources, is that his tariffs have secured $10 trillion in U.S. investment. The idea being this boosts the U.S. economy, which indirectly should help Bitcoin and crypto prices. So this whole tension, political pressure versus the Fed's decisions, it's a really crucial dynamic. It adds layers to how you interpret market moves. 2, the geopolitical undercurrents in crypto.
Okay, moving beyond interest rates, there's also this ongoing geopolitical friction. Our sources specifically mention the conflict between Israel and Iran, described by some as an unnecessary war. Now, initially, you'd think this would hammer crypto prices, right?
Well, yeah, but what's fascinating and a key insight from our sources is that right now, this geopolitical chaos is not impacting the prices as much. Doesn't mean it won't, though. The advice is definitely to see as time unfolds what kind of an impact it might have. It's more like a background noise than a major market driver at the specific moment.
But, this tension takes a really sharp, almost dramatic turn in the cyber world. We've got pretty big news about an Iranian exchange, Nobitex. Reports say it was hacked for over $90 million.
Which, of course, makes you ask, who did it and what does it mean? There's an interesting blog post from Elliptic suggesting there's a possibility that Israeli hackers were behind this particular hack. Apparently, an activist group, reportedly Israeli-linked, claimed they did it on Twitter or X. They said Nobitex was a financing tool used to bypass sanctions, and they even threatened to leak data, source code, the whole lot.
Wow, so this isn't just, oops, customer funds are gone, which, sadly, they are. Another grim reminder of not your keys, not your crypto.
Yeah.
It feels like it signals something much deeper, doesn't it?
Absolutely. Looking at the bigger picture, this hack is seen by analysts as a strong indicator of rising geopolitical cyber warfare in the crypto space. It's moving beyond just criminals trying to make a quick buck. It's described as politically charged and ideologically driven cyber operation, basically targeting crypto infrastructure as a form of digital warfare. That line between cybercrime and actual cyber warfare, it's getting really blurry, and crypto, well, it's no longer neutral territory. That fundamentally changes the risk calculation for anyone involved in digital assets. Understanding these undercurrents is becoming critical. 3, U.S. regulatory breakthrough, the Genius Act.
Okay, let's switch gears. Moving from global tensions to some actual progress on the regulatory front in the U.S.
Mhm.
The Senate passed something called the Genius Act, and this sounds like a really big deal for stablecoins.
Oh, it is. What's really notable here, and our sources emphasize this, is that it passed on June 17th with strong bipartisan support, a 68-30 vote. It's being called a landmark establishing federal regulation for U.S. dollar stablecoins. Now it just needs House approval and then President Trump's signature.
So what does this actually mean for stablecoins? What are the nuts and bolts? Our sources point to three main things. One, stablecoins have to be backed by genuinely liquid assets. Think U.S. dollars, short-term treasury bills, real stuff. Two, the issuers. They need to disclose exactly what's backing their coins and do it monthly. Transparency. And three, the bill apparently also tackles concerns about, big tech companies or foreign issuers getting into the U.S. stablecoin game.
Right. And stepping back, this isn't just a genius thing, as the name implies. Sources suggest it's a strategic move by the U.S. By setting clear rules for U.S. dollar stablecoins, they're essentially trying to anchor a big chunk of the global crypto economy to the dollar. It could strengthen the dollar's role in the digital future, maybe, and it sets a high standard for other countries. We're already seeing positive reactions in Circle and Coinbase stock prices, according to the reports. It really raises an interesting question for you, the listener. How will this impact, say, euro-backed stablecoins or yen? Will other countries copy the U.S. model or maybe go their own way with different rules? 4. Global innovation and adoption. From security partnerships to luxury travel in Dubai.
Okay, let's pivot again. From regulation to innovation and actual adoption. How is crypto being used? We have reports of a pretty compelling partnership between Relai, which is a Bitcoin-only company, and Casa. Casa is pretty well known for security and wallet services.
Yeah, this looks interesting. The partnership aims to offer multi-Bitcoin security, basically a smooth way to buy Bitcoin and then immediately secure it. So users can buy and sell through Realio's platform, which is compliant, and then send it directly to Casa's self-custody vault for long-term storage. It's described as a secure end-to-end Bitcoin experience. The goal is to empower users to fully own their financial future, secure their legacy. Making self-custody easier and safer seems to be the key here.
Good stuff. Now let's look elsewhere globally. How are other financial centers approaching this? Dubai, in the UAE. Seeing some really remarkable moves there in tokenization and adoption. The Dubai Financial Services Authority, the DFSA, has started working with firms chosen for a tokenization regulatory sandbox.
And this really underlines Dubai's push for responsible innovation, especially within the Dubai International Finance Center, the DIFC. This sandbox idea isn't totally new for them. It runs under their innovation testing license program, which they actually launched back in 2017 to encourage fintech. And it builds on things they've done before, like specific rules for investment tokens in 2021 and other tokens in 2022. Plus, they just tweaked rules this month, June 2024, to make recognizing tokens and approving stablecoins easier. They're definitely iterating.
Yeah, and what's really striking from the source material is the global interest. This sandbox, launched just back in March, got 96 expressions of interest. And get this, from firms in the UK, the UAE itself, Europe, Canada, Singapore, Hong Kong, massive global attention. The focus seems to be on tokenization of bonds, including something called sukuk. Those are Sharia-compliant financial certificates, kind of like Islamic bonds plus fund units, and asset custody solutions. Tokenizing sukuk could make them way more liquid, more accessible. It all ties into Dubai's big plan, their D3 economic agenda, to be a top global financial hub by 2033.
And speaking of actual use cases, adoption on the ground, our sources also spotlight 40 Aviation. They're a private jet charter consultancy. And they've partnered with DXB to start accepting crypto payments for luxury travel. That really shows crypto moving into different kinds of markets.
And check this out. Our sources also mentioned that Trump Tower partnered with DXB like 3 months ago for payment processing. Small world, maybe. Anyway, this 40 Aviation deal lets them take crypto, offering what they call seamless, secure, and modern payment experiences, plus potentially faster settlements and lower fees than old-school methods. It definitely reflects a growing trend, crypto adoption in high-end luxury assets. It's setting a new bar for customer experience, moving beyond just simple online checkouts. V, a deep dive into the numbers, market snapshot, and decentralized trends. Okay, let's pull back now, look at the wider market. What are the numbers telling us today, June 19th? Despite that little dip we talked about earlier after the Fed news, market sentiment still showing up as greed, according to the indicators our sources use. Bitcoin is hovering around the $105,016 mark.
Right, let's try and distill these numbers. What's the pulse of the market? Overall picture, yeah, a slight decline, but the global crypto market cap is still huge, $3.3 trillion. Significant value there. Bitcoin specifically down about 0.44% in 24 hours, down 2.59% over the week. Ethereum, similar story, down 0.56% in 24 hours, but a bigger drop over the week, 8.53%. But interestingly, Ripple XRP is actually up a tiny bit, 0.05% in 24 hours, and up 3.79% over 7 days. So maybe some altcoins are starting to move a bit independently.
And we're still seeing pretty consistent inflows into the ETFs, the exchange-traded funds, over $400 million total still, $47.5 billion just in the last 24 hours alone. That's still solid interest. Total crypto market volume today, a substantial $103 billion, although that is down about 8% compared to the previous 24 hours. So activity dips slightly, but the interest is there.
Yeah, and one area that's particularly compelling right now is DeFi, decentralized finance. Financial services like lending, trading, but directly on the blockchain, no traditional banks needed. The numbers there, according to sources, have been picking up pace since the last 6 weeks or so. DeFi trading volume is at $18.64 billion, and the total value locked, or TVL, that's the amount of capital locked in DeFi protocols, a key measure of trust, is well above the $100 billion mark. It's at $112.87 billion. And look at this, decentralized exchange, or DX, dominance is almost half the market, 48.53%. That means nearly half of all trading volume is happening on platforms where you control your keys. That says a lot about the shift towards self-custody, wanting censorship resistance. Now, sources do point out centralized exchanges still handle a big chunk, maybe 25-30% of that volume, but the DX trend is strong. DeFi itself makes up about 7.12% of the total crypto market's 24-hour volume.
Okay, and if we drill down into specific DEX volumes, PancakeSwap is just, wow, definitely off the chart at $10.21 billion in 24 hours. Uniswap, less than half that, $4.42 billion. And others mentioned are much lower. Dragon Card at $565 million, Radium around $53 million, Hyperlid about $482 million. PancakeSwap is clearly the giant in that specific space right now.
Which kind of leads us to think about the engine room of crypto, really, stablecoins. Their total market cap today is a staggering $252.83 billion. Huge amount of value parked there. USDT Tether is still the leader, but its 24-hour trading volume is $73.21 billion, and our sources suggest that should have been higher, maybe above $100 billion if the market was really, really frothy. USDC's volume is around $10.5 billion, BUSD about $6 billion.
All right, so for you listening, a key thing to watch over the next few days, especially this weekend maybe, keep an eye on that 24-hour trading volume for Bitcoin, Ether, but especially for Tether USDT. If that USDT volume jumps over the $100 billion mark, and if crypto prices start pumping alongside it, well, our sources suggest this weekend will be absolutely great. It's seen as a strong sign of liquidity and overall market confidence. Spotlight on Cardano dApps, a deep dive into unique wallet interactions. Okay, we're going to do a bit of a deeper dive now, focusing on decentralized apps, or dApps, specifically on the Cardano blockchain. This follows that recent suggestion from Cardano co-founder Charles Hoskinson about maybe moving $100 million worth of ADA, the native token, into Bitcoin in DeFi. And as you can probably guess, a lot of the community members were definitely not happy about that idea. It caused a bit of a stir.
Yeah, so what's really insightful here, according to the analysis we looked at, is to examine the unique active wallet interactions. Basically, how many distinct wallets are actually using the smart contracts on Cardano day to day? It gives a real sense of user activity. And, well, unfortunately for Cardano, based on this metric, the numbers are described as definitely not great.
Okay, let's put that in context then. The number one dApp on Ethereum, for comparison, typically sees around 15,000 unique active wallet interactions in a day. 15,000.
Yeah.
Now, for Cardano, the top 5 dApps, according to these sources, number 1, Dexter, only 734 unique active wallet interactions. 734. The source calls this ridiculously scary, less than 1,000. Number 2, MinSwap. Better, but still only 2,135 interactions. Number 3, Wing Riders, just 136 unique wallets. Number 4, JPG Store, 99, actually below 100. And number 5, NKR Minting, 94 unique wallet interactions.
The difference is absolutely stark and scary, as one source put it. Now, look, there are other ways to measure blockchain activity, right? Dollar value lock, total balance, and smart contracts. But focusing on these unique active wallet interactions really highlights user engagement, how many people are actually doing things. And this insight is pretty crucial for you, the learner, to grasp the true adoption and activity level on different platforms. It goes beyond just market cap. It definitely raises questions about how quickly certain ecosystems are managing to build up an active, engaged user base. Outro.
Wow. Okay. We have definitely unpacked a lot today, haven't we? From that whole macroeconomic tug-of-war over interest rates, President Trump's pretty strong views, to that surprising turn into geopolitical cyber warfare using crypto, the landmark U.S. stablecoin regulation, the Genius Act, and then those really exciting adoption trends we're seeing in places like Dubai.
Yeah, if you step back and look at the bigger picture, what really stands out is this accelerating convergence. You've got traditional finance, geopolitics, and this cutting-edge decentralized tech all kind of crashing together. I think the insights from today really underline that the crypto market isn't just about price charts anymore, is it? It's this incredibly dynamic mix of global events, political decisions, and, of course, technological evolution. It's constantly shifting.
So what does all this mean for you listening?
Well, it means staying sharp on central bank moves, understanding the subtleties of these geopolitical conflicts, even the cyber ones, watching how regulations like the Genius Act actually play out and shape the future, and also being able to look beyond the hype and discern real adoption, real utility, like we saw comparing those DApp user numbers. Not all growth is the same. And we talked about how that line between cybercrime and cyber warfare is blurring, especially in the crypto space. Crypto isn't neutral anymore. So maybe this leaves us with a question to ponder. As these digital assets get more tangled up with national economies, with global power struggles, how can we, maybe as a global community, work together to strengthen digital security? And how do we foster genuine financial sovereignty for individuals in this landscape that's getting more complex, more contested all the time?
Definitely something to mull over until our next deep dive. Until then, keep learning, keep asking questions, and keep exploring.